Okay, let's unpack this. Imagine being, what, 12 years old? And you take $1,000, maybe birthday money, and you put it into something hardly anyone gets. Bitcoin. Back in 2011.
Right. A total leap in the dark for most people then.
And then, boom, years later it turns into millions. Sounds like, well, the ultimate dream, doesn't it? A perfect success story.
It really does.
But what if that dream, that amazing win, was actually, looking back, a huge missed opportunity? A lesson in what not to do, even though it looked so good at the time.
That's a fascinating angle.
Welcome to the deep dive. We sift through stacks of sources to pull out the key insights, basically giving you a shortcut to getting informed. We find the surprising bits, maybe add a little humor. Keep you listening.
And today, it's all about Erik Finman.
Exactly. His Bitcoin story. It seems like a massive success, and, well, it was in many ways. But it tells us so much about, the real investment mindset.
More than just the numbers.
Definitely more than just the numbers. It's about the long game, especially now with everything changing so fast in finance.
Yeah, the landscape is constantly shifting.
So our source today is mainly from a podcast narrative, investment lessons, time, knowledge, faith, and specifically a piece on Erik Finman called An Investment Game Longer Than You Think.
A really insightful source, actually.
It distills some critical lessons for anyone investing today, and we're going to explore this idea that maybe the biggest wins aren't about perfect timing.
But about time in the market, staying put.
Right, and how that applies now to things like AI, DeFi, these new frontiers.
It's very relevant.
Okay, so let's go back. 2011, Erik Finman, just 12 years old, an American kid.
12. It's hard to even picture.
He gets his hands on $1,000. Not a huge amount, but significant for a kid. And he buys Bitcoin.
And it was just, what, $10 a coin?
$10! Unbelievable now. And he didn't just stop there. He kept collecting them. Ended up with 403 Bitcoin.
403. Wow. As a teenager.
So fast forward 6 years. It's 2017. Bitcoin has gone absolutely parabolic.
Yeah, everyone was talking about it then.
Yeah. And Erik sells. He sells all 403 Bitcoin. The price. Around $5,600 per coin.
Okay, do the math there. It's serious money.
It works out to about $2.25 million. Cash. For someone who's, what, 18 by then?
18 years old, turning $1,000 into over $2 million. I mean, that's incredible.
It is. It's a huge success story by any normal measure. He got tons of press. Young crypto millionaire. Sounds like he nailed the exit, right? The perfect move.
It absolutely does sound like that. And, that's where the really deep lesson kicks in. Because, yes, $1,000 to $2.25 million in 6 years, that's life-changing money for anyone.
Absolutely.
But, and this is the big but, the missed opportunity here is just staggering. It really holds up a mirror to how we think about investing.
Okay, so lay it on us. The what if?
What if Erik had just done nothing? Held on to those 403 Bitcoin. Today, their value would be north of $45 million.
$45 million compared to $2.25.
Yes, over $45 million. It's hard to process that difference.
Yeah.
And it's not about criticizing him personally.
Right. It's about the lesson for everyone else.
Precisely. It's a universal thing about investor psychology, about patience, about having that long-term vision that so many of us, well, we struggle to maintain.
Wow. Over $45 million versus $2.25 million. That's nearly 20 times more money he just walked away from.
It really messes with your head, doesn't it?
It does.
Because he did make a huge profit, a life-changing profit. Yet the real win was so much bigger if he just sat tight. What's that? Tell us about that urge, that feeling we get to just take the money and run when things look good.
Yeah, that urge is strong.
It is. For a lot of listeners, securing any profit feels like the smart thing, the safe thing.
It tells us our internal timelines are often way off. They're not aligned with how truly significant wealth, generational wealth sometimes, is actually built.
Okay.
The market rewards patience, sure, but really it rewards time. Time spent in the market, not necessarily trying to perfectly time it. That pull of immediate gratification, locking in a profit that feels certain, it's a powerful psychological bias.
We're wired that way. We absolutely are. Erik's story is just such a stark example of that exponential power, the compounding effect over years that gets left on the table because of, well, short-term thinking or fear.
Fear of seeing it go down again.
Exactly. Which brings us to our first big lesson. Investment is fundamentally about time, maybe more than just price. Letting things mature,
Yeah.
Not picking the fruit too early.
I get the long-term idea. I really do. But still, selling for $2.25 million at 18, a lot of people listening will think, that was smart. He got a car, funded projects, lived that young millionaire life for a bit. How do we square that feeling, taking the win, with this idea of a missed opportunity?
Yeah, that's fair.
Because just holding can feel like passive, like you're not doing anything smart, just waiting.
And that's a really important distinction. It leads straight into lesson number 2. Holding is a strategy. It's not passive at all.
Okay.
Many people see it exactly as you said, doing nothing, just letting things sit. But in reality, it's often one of the hardest, most active strategies.
How so?
It takes incredible emotional control, discipline. You need unwavering belief in where things are headed, the future vision. And you need the guts to ride out truly wild swings in the market without hitting the panic button.
Right. The volatility can be brutal.
Exactly. So was Erik wrong to sell for his personal goals then? No, that's his choice, his life. But the lesson for us, looking at it now, is about the sheer power he didn't tap into, that long-term compounding.
Okay.
Think of it like planting a rare tree. You don't dig it up every few months to see if the roots are growing, right? You trust the process. You trust the soil, the sun, the potential. You let it grow into something magnificent. Selling early is like chopping it down when it's just a sapling.
That's a great analogy. The farmer planting the seed. Okay, so holding isn't inaction. It's active patience, active conviction. It's almost a mental game.
A huge mental game.
But when we say holding as a strategy, is it just mental discipline? Or are there things, especially with digital assets today, that make holding more, well, active, more involved than just sitting on your hands?
Oh, absolutely. Today's financial world, especially in crypto and DeFi, adds really interesting layers to holding. It's not just about passively owning something anymore.
Like what?
It's about strategic positioning. Take decentralized finance DeFi or these newer projects like AIFEEX. Holding often involves something called staking.
Staking, we hear that term a lot.
Right. Staking basically means you lock up your digital assets, your coins or tokens, to help run the network. You support its operations, its security, and in return,
you get rewards.
Exactly. You earn more assets, kind of like interest, but often at potentially higher rates. Plus, you become part of the ecosystem's governance sometimes. So holding becomes an active contribution, and you get rewarded for that belief and participation.
So it turns holding from just waiting into actually doing something that supports the project.
Precisely. When you understand how these systems, these ecosystems, are actually designed for future growth, you see the real power behind holding and staking. It's a signal of belief in the tech itself.
Okay, so we have the power of time, we have holding as an active strategy. But what gives you the strength, the conviction to actually do that, to stay in when the market's going crazy, when everyone around you might be panicking?
Yeah, that's the bedrock, isn't it?
Because if you don't really get what you own, every little dip, every scary headline, it just creates anxiety, right? That fear can make you do irrational things.
Absolutely spot on. And that's our third critical lesson, knowledge. Knowledge is where true confidence comes from.
Okay.
Without really understanding the asset, the tech behind it, what it does, the problem it solves, the vision, the team, every price swing feels like a personal attack. You see red, your gut screams, sell, get out.
Yeah, I think we've all felt that.
But when you have solid knowledge, it gives you perspective. You can zoom out from the daily noise. You believe in the bigger picture because you've done the work. You understand why it has potential. That lets you stay steady when things get choppy. Your conviction comes from being informed, not just from hoping or guessing.
So it's not just about buying the token, it's about understanding the why. For something complex, like, say, AIFEEX you mentioned, investors need to really dig in, read the white paper, figure out the tokenomics, understand these AI DeFi strategies.
Yes, absolutely. Those aren't just buzzwords.
What do they actually mean for someone trying to build that kind of deep confidence? Tokenomics, AI DeFi.
Great question. So tokenomics for a project like AIFEEX refers to its economic engine. How is its native token created? How is it distributed? How does it get used within the system? Crucially, how is it designed to encourage people to hold it, use it, and how does that potentially drive its value over time? It's like the project's financial DNA.
Okay, the rules of the game for that specific token.
Exactly, and AI DeFi strategies. That's about how they're weaving artificial intelligence into these decentralized finance protocols. For AI fee, the source suggests this could mean AI optimizing staking yields, making trading more efficient, maybe managing risk, or even helping connect its ecosystem to bigger traditional financial markets.
So AI isn't just a label, it's doing specific jobs within their system.
That's the idea. Understanding these mechanics, the tokenomics, the AI integration, that's what gives you the basis for real conviction. You know why you're holding, beyond just hoping the price goes up. Right. You see the strategy.
This landscape is definitely changing fast. AI, DeFi, constant innovation. It feels like the old rules maybe don't apply in the same way. From that strategic viewpoint you mentioned, where are the biggest opportunities now? Is it still about being the quickest trader?
Strategically, I think the pendulum is swinging. The truly massive opportunities seem to be moving away from the rapid-fire traders trying to scalp tiny profits.
Okay.
Instead, they seem to consistently land with those who have the longest vision, the ones who can see the fundamental shifts happening underneath the surface noise.
And AIFEX fits into that.
Well, what's interesting, according to the source material, is how AIFEX is explicitly described. It's positioned as not being a coin for short-term flips or speculation.
That's a clear statement.
It is. It's a signal about its intended design and potential path. The focus seems to be on rewarding long-term participation, especially through things like its AI DeFi staking.
So tell us a bit more about that strategic design. The source mentioned connecting to global markets and compared it to Bitcoin in its early days. That sounds pretty ambitious.
It's definitely ambitious, but that comparison to early Bitcoin isn't necessarily about price prediction. It's more about potential that's maybe not widely recognized yet.
Yeah.
Remember, early Bitcoin was largely dismissed, ignored. Only a few really saw the revolutionary potential. AIVX, based on the descriptions, seems to be aiming for a future where AI and DeFi are deeply integrated with traditional finance.
How so?
Well, the goals mentioned include connecting with established global markets, things like potentially linking to exchanges like the Hong Kong Stock Exchange or NASDAQ,
Yeah.
and even leveraging AI within centralized exchanges, these AICEXs.
AICEX, what's that?
Think of a regular crypto exchange, but supercharged with AI for better trading, managing risk, ensuring liquidity, maybe even creating new financial products. This suggests AIFEX is trying to build foundational infrastructure for the long haul.
Infrastructure, not just a token.
Exactly. Infrastructure designed for lasting growth and utility, not just a quick speculative ride. That's the parallel to early Bitcoin, building something potentially foundational.
That comparison really lands differently when you frame it as potential infrastructure. It forces you to think longer term, like maybe Erik Finman could have. So for the investor who really gets that bigger picture, who sees the potential roadmap for something like AIFEX and commits to holding, are they the ones who might capture those kinds of enormous opportunities that Erik missed out on?
That certainly seems to be the implication. It's less about luck and more about adopting that visionary investor mindset.
Okay.
Not just chasing the quick buck, but having the understanding and the patience to hold for a potentially much larger outcome down the road. An outcome based on understanding the tech, the strategy, the long-term vision.
It's like being a strategic partner in building something new, not just a spectator.
Well put. That's precisely it. The core idea we keep coming back to is this. Investment isn't really about winning lots of small, short games.
Right.
It's about understanding the big game, seeing the whole strategic board, and then having enough conviction, enough faith grounded in knowledge to stay in that game until the significant results actually show up. It's a real test of vision and patience.
So let's wrap this deep dive up. We'll leave you, the listener, with something to chew on. In this world of AIFEX, DeFi, constant change, think about this. Who really captures the massive benefits from these tech shifts? Is it the people jumping on every trend, selling at the first sign of trouble or profit, reacting constantly? Or is it the ones who take the time to understand, who genuinely believe in the long-term vision, see the strategy, and commit? The ones who hold that conviction?
It's a critical question for anyone investing today.
It really is. This isn't just about one specific asset, is it? It's about your whole approach to innovation, to the future, and how you position yourself for potential wealth creation in this incredibly exciting, always changing landscape. Something to think about.